Alrighty guys, what is going up? I hope you guys are all having a great and amazing day today. Now in today's episode, we're going to be talking about the top REITs to buy this month. I hope you guys enjoy it, and if you guys get anything in value, make sure you guys hit that like button and subscribe to the channel. Also, go ahead and check out my course. It's $5. You guys will learn how to properly invest in the stock market, and we have a whole lesson on REITs. It's $5. It's definitely worth it. First link down below. So now to jump into it, roll the intro. Let's go. Bam. Alrighty guys, so the very first REIT that I am keeping an eye on is ticker symbol O. This is Realty Income Corp. Now this ETF was trading at highs at around $84, sold off all the way down to about $38. That was an overall 45% decline in stock price due to this whole recession we are in. Now the stock slowly kind of consolidated and did break above this 200 moving average line. Now this REIT has a tendency to use it as support. So you guys can see it comes in contact with it, boom, boom, and then we did get some sell off. And then when it falls below it, it often gets used as resistance. So, it did have a hard time breaking above it, broke above it, and then used it as support multiple times, sold off under, and now it's going to come in contact with it again here shortly. Now, this stock here, in my personal opinion, I do think we could get definitely buying pressure back up to about $67 per share within the next couple of months. The reason why a lot of people love this stock, like myself, is because it is a monthly dividend stock. So you guys can guarantee a dividend paycheck every single month, which is really nice. You compound your money a lot faster doing it that way, because those dividends that you get, you reinvest them, and then you get more shares, and then those shares get you more dividends, and you just have this overall compound effect, which is really, really nice. But a lot of people love this one, and I think it's definitely one to keep an eye on this month. Now the next one here is Public Storage. This one is a little expensive, coming in at around $235 per share. Now the reason why I love this one so much is because we are coming in contact with old highs here. You guys can see it actually did form new highs at 236, but it is coming in contact with these new highs here. I think that this is a perfect growth and dividend payment stock. You guys get a $2 dividend, I believe, every quarter, which is really, really nice. So you get that, that cash flow coming in. And on top of that, this is a pure growth stock. Right now it is just kind of consolidating, but for a long-term approach, I could definitely see this stock moving up to about 265 to about 270. That is kind of my price target for this one. Overall, it does have some nice support here at around 213, resistance here at 233 and 236. So yeah, we could get some temporary sell-off here, but if you're a long-term investor, don't even worry, because you're investing for the long term. Now, the best approach when investing in all these REITs is the strategy dollar cost averaging. So if let's just say you guys have $100 or $1,000 to invest, what you do is you take $1,000, instead of investing one lump sum, maybe you invest $100 a month over the next 10 months. So you're still investing $1,000, but you're just spreading out your monthly payments. What that does is it gets a good overall average price for the month. It's one of the best ways to invest in almost anything. So moving on. This one here is AMT, American Tower Corp. Now this one is a wireless tower company that has a whole bunch of broadcast systems, wireless servers, stuff like that here. And honestly, this stock performed pretty decent in this whole recession we were in. You guys can see it did come in contact with some highs here at around 272, and then we just did get some sell-off here. Now, I do think the fair value price is around 250, so we're just undervalued on that price point, and you get that dividend check. This company holds a lot of cell towers and stuff like that. So, obviously, a great one to keep on watch, and I think this is a perfect long-term approach with investing in kind of like 5G and investing in a lot of other stuff that's wireless too. So it's a pretty cool mix here. Solid dividend checks coming in. Alrighty guys, so the next one here is ARE. The reason why I like this one so much, one, you get around a 2.9% dividend every single year, which is pretty solid. And not to mention, this company is really focusing on elderly people, and they do have a ton of medical facilities, whether it's medical offices, medical research centers. And honestly, you guys can see that since the sell-off here, since it was a medical facility that is still operational, it came back up to some new highs and did sell off here. I do think that we will probably get some more buying pressure to around 174 to around 176. I don't know if we will come in contact with highs within the next month or so, but obviously this is definitely one to keep on watch. This company is really focusing on those elderly patients, elderly residents. They do have a ton of medical facilities, so it's obviously one to keep on watch here. So the last and final one here I want to keep on watch is ticker symbol EQIX. The reason why I like this one so much is because this REIT is actually a company that holds a lot of data servers. And data is one of the fastest growing sectors out there right now. So you guys can see this stock has a beautiful upward trend. It is a little expensive, coming in at almost $1,000 per share. But the growth of this is actually really, really strong, not to mention the dividend checks coming in every quarter. You know, this stock is up a little bit today, does like to use this 200 moving average line as some support here. Now, do I think the stock's overvalued right now? Well, yeah, we probably will get some temporary sell-off back to about $800 per share. I think that's a fair support for this stock here because that is around that old resistance line, and there has been tendencies where old resistance does turn into new support. So this is where I'm just going to set an alert. But obviously the best strategy is that dollar cost averaging to get a good overall average price for your stock shares and for your investment. So that is it though. I hope you guys enjoyed the episode, and if you guys did, make sure you guys smash the like button. We'll see you guys tomorrow in another episode. Remember to stay happy, stay positive, and overall stay safe out there. Don't forget to check out my course. Take care. Bam.